Hey folks, Dan Bird here with the Daily Scan for Tuesday, November the 4th. And the market was a little weak this morning, even though Palantir reported last night and had great earnings. They beat for 21 quarters in a row, but sold off anyway. We're going to take a look at that as well as the rest of the Magnificent Seven and see what's going on. Is the AI trade exhausted? And as I've been saying for quite a while, it's technology that's been holding it up. So if they are starting to roll over, then the whole market might be ready to go down. We'll see. Or on the other hand, is it time to buy the dip? That's what I think a lot of people are thinking. They see things going down a little bit and jump in and think that that's the end. And maybe it is. So let's take a look and see what's happening. I'd first like to thank everyone who replied on yesterday's video. I really appreciate that people are actually watching. I know it's that sometimes you just watch the videos, and I do this myself. I just watch the videos and actually don't reply to anything, which is fine. But as I'm creating these, I'm sitting here by myself, kind of talking to myself. So I never know if there's anybody out there actually getting any value from it. And I want to make it clear that I am not doing this as a business. I know a lot of people on YouTube are creating videos really for a business. They create multiple, they're very prolific and trying to drive up viewership. I've had people contact me to say, I can increase your viewership if you just sign up and take our service. And I'm frankly not really interested in that. I'm just doing this for educational purposes. I am not making a business out of this. So just want to make sure everybody understands that. This is just relaying some of the things that I've learned over the years, some of the things that I see in the market, and hopefully helping other people to become better traders or understand the stock market a little bit better. That's really the only reason I'm doing this. So thanks for watching. I really appreciate it. I appreciate all the comments. I certainly don't expect that every day, but I appreciate it for yesterday. Anyway, let's take a look. I am not a financial advisor, of course, and this is all for educational purposes only. So let's go take a look and see what the market is doing today. Was down in the morning, started to come back some, but then I noticed right now it's kind of rolling over a little bit. So there is the big gap down. So there's, this is the S&P. This is a 10-minute chart. So each of these bars represents 10 minutes. So you can see right there, big gap down this morning. Then it started to move back higher. And as always, right around 10:30, whatever the market is doing, this is amateur hour between 9:30 and 10:30. And usually whatever the market's doing up until 10:30, the professional traders will fade it, meaning they'll do the opposite. And it is actually rolling over right now, but we'll see if that continues or not. The important thing is right here, technology. Now these charts are relative to the S&P. So keep that in mind. This is, if it's moving down, that means the S&P is outperforming the technology group, meaning your money would be better just in the S&P index rather than in the technology sector. So technology is weaker versus the S&P. Discretionary communications is pretty much flat, but it's been down for the last week. So these are the aggressive sectors. These are the ones that drive the market higher. Technology makes up about almost 35% of the total S&P. So it is the biggest sector in the S&P. And that's why the whole market will move when technology is moving. And right now it's underperforming the S&P. If we look at the defensive sectors, they're starting to move higher. So that indicates rotation out of those aggressive sectors and into the defensive sectors. It's not significant yet. It's only going up just slightly, but there is a little bit of rotation, it looks like, into defensive. And these are the cyclicals. So financials and healthcare are, there's some money moving in there. Industrials is still heading down. Materials is moving up slightly, and energy is pretty much flat. So it looks like money, and the money flow right here, you can see this is the S&P money flow. Was down yesterday in the morning. Actually, yesterday, I mentioned this yesterday, that money flow was actually pretty weak. It's starting to move higher right now, but still looks kind of weak to me. And here's the rotation. So growth versus value. This shows you that money is rotating out of growth and into value, out of discretionary and into staples. I'm going to talk about staples here in a minute. It's a very interesting chart that I want to show. Out of technology and into the index, out of semiconductors, and transports actually is doing a little bit better. So out of aggressive and into defensive. That's what the rotation looks like right now. I've talked about the breadth for quite a while. This is the percentage of stocks above their 20, 50, and 200-day moving averages. And you can see now the 20 and 50 are below the 50% level. In fact, the 20 is at 34% right now. And the 50 is at 39%. The 200 is still at 55%, so still above the 50% level. But look at the bullish percent index, just continuing to drop. It's just, you just draw a line back here, and you can see that it is just continuing to go lower. And it's below 50% right now. So this is the percentage of stocks in bullish configurations. So that implies that most of the stocks are not in bullish configurations, maybe in bearish configurations, but they are not bullish right now. So that also indicates rotation and that the market may be getting exhausted. Here's the Russell 2000, still heading down. This is the small and mid caps continuing to head down. There's the gap down this morning, and there's the rollover, just like the S&P. Looks very similar, actually. And this is a relative to the S&P right now. You can see the mid caps and small caps, after going down all week last week, has kind of leveled off. So it's pretty much now flat or equal to the S&P. So your money is not better off in one place or the other than over the last week, it was better off in the S&P. But the S&P, if it's rolling over, then small and mid caps are basically just treading water, just following along with the S&P. So it's not telling us anything one way or the other, just pretty much flat right now. Also breadth, same thing. These are all three below 50%. This is for mid caps, and small caps are the same, all three below 50%. In fact, the stocks above their 50-day is only 31% right now. It's actually worse than the 20-day, which is interesting because the 20 usually moves sooner, but it looks like a lot of weakness in the breadth in that area. And here's the NASDAQ 100, which is where it looks like most of the weakness is. There's the big gap down, there's the rolling over, but it's starting to go down quicker right now. And you can see here the advancers minus decliners is below zero. Here's the zero line up here, this gray line. So it's been below zero all day today. And the up volume minus the down volume is pretty much flat right now. So that is showing a lot of weakness. The VIX spiked higher in the morning, which you would expect with that kind of gap down, and pull back a little bit, and now starting to move higher again. It's at 18.31, not yet back above 20, but starting to trend higher. So that's a little bit concerning as well. All right, let's take a look at the dashboard real quick. Here's the Dow. You can see everything is negative. The NASDAQ 100 down quite a bit. Here's the S&P 500 down as well. 10-year is down, so everything's down. 20-year is up. That's the one thing that is up. The dollar is up, which actually is not good for stocks, but the dollar is starting to recover. If we look at the chart for the dollar, you can see right here, this is the intraday, and here's the daily chart. So if you just look at this and forget that it was the dollar, you would think that looks like a pretty good bullish chart. If you just thought about this as a stock, you would say that looks like a pretty good bullish chart right there. All the moving averages are crossing over. It's above the 200. So the dollar looks like it's starting to run higher. And this is the weekly, so the longer term weekly view. And again, if you just blanked out what the symbol was, you would think that looked like a pretty good recovery, pretty good stock to get in right now. So the dollar, if that moves higher, it takes liquidity out of the system, and that won't help stocks if that happens. We can see down here, the worst performer is large cap growth. Everything is red though. So Value is performing better than growth, which is pretty much what I just showed you. Down in the small cap growth, actually, they're pretty much equal, but growth is performing slightly better than value. But everything is red right now. And on the sector summary, financials, healthcare, and staples. Staples is one of the staples in real estate and utilities. These three are the most defensive, so they're near the top. And the most aggressive is technology, and it's down at the bottom right now. Discretionary and services are in the bottom part as well, both of them negative. So all of this is not a good sign. Here's let's look at 1 month. These are the S&P 500 stocks for 1 month, for 6 months. And down here we have, these are the ones reporting. AMD reports tonight. We're going to take a look at all of those stocks here in a second. And here's what the charts look like. So it's not a red alarm yet. Yes, we had a sell-off and never like to have sell-offs like that. Had a big, huge one back here. This one just made it right back to the 21 for the S&P. So that actually is still very viable. It maintains the uptrend. If it stays above the 21, especially above the chandelier exit right here, then that will be positive. That means it's a buy the dip time. So far today, it looks like buy the dip. On the Russell 2000, however, it's well below the 21 drop. It tried to hang on to it yesterday, but now it's dropped well below the 21. This one looks the worst of all of them, other than Bitcoin. Bitcoin is down significantly. So I talked about Bitcoin before, about this support line that goes back to the beginning of the year. It's a really important support line, and you can see it is a big, huge red candle today. So Bitcoin continues to look extremely weak. Here's the support line that goes way back here. Bitcoin is now below all the moving averages, and it may continue down here to 100K pretty easily. It's at 102 right now, so 100K I think is well in sight. And based on that, I talked about MicroStrategy and its relationship to Bitcoin before. Let's take a look at the gallery view, and I'll look at Bitcoin and MSTR side by side. So this is something you can do in stock charts. You use gallery view and you put one symbol with a comma and the next symbol, and it shows you both of them side by side like this. So remember, Bitcoin's on the left, MicroStrategy is on the right. Bitcoin, of course, trades 24/7, so it's not going to be quite the same. But on the daily view, you can see Bitcoin over here below the 200-day. MicroStrategy dropped below the 200 way back here in August. Tried to recover once, twice, 3 times. Couldn't get above the 50 and the 200. The 50 finally crossed the 200 and continuing to go down. That's very bearish. This is compared to its industry group, software. It is underperforming its own industry group. So, and here's the weekly chart. Again, you can see that it's much weaker. MicroStrategy much weaker than Bitcoin. MicroStrategy's whole business model is tied to Bitcoin. Bitcoin right now is at a critical point. 100K is just below the 50-week moving average. This is a weekly chart, but you can see it came down to that level 3 almost another time back here in 23. This one was in 24. This one was in April 25. It's right back there again. So this is where the place where it needs to hold that level. If it drops below 100K, then it could very rapidly head lower. Now, what does this mean for MicroStrategy? So I looked this up, and it's actually not a red flag yet. In fact, it has to go pretty low for MicroStrategy to be really hurt by the Bitcoin price. They could be hurt from other things. their own business model, but they actually had pretty good earnings last week. So, but the level where the risk level is high is all the way down at 20,000 price per Bitcoin. So I don't think there's really much issue right now other than the stock itself. The chart of the stock itself does not look that great. So it could get down here to 140 where the 200-day is right now. So, but it's really not going to be adversely affected by Bitcoin for quite a while, I don't think. All right. Let me show you the XLP chart that I mentioned before. This is really interesting. So for subscribers on the charts page, I have here bottom finder. So if the market continues to sell off, then this will tell you when we've hit the bottom and when we're getting ready to reverse and go back up. But this XLP chart is right down here, going back 25 years. This is a relative chart. So it's XLP is the staples, which is a very defensive sector, versus the S&P. And this is what it looks like going back 25 years. Now, what I did was, first of all, notice that it's below its 2000 low. So this relative chart, this is relationship between staples and the S&P. Right now, it is below its all-time low. That is very rare. Usually when it goes that far down, the market is very bullish because this is a very defensive sector. So if that sector is selling off, then that means the market is usually going higher. But where I have these arrows, I'm pointing at significant reversal candles. After it goes to a significant low, there is a significant reversal candle. This one here happened right when it hit the low. That was in 2000, and we can add the S&P to this. Actually, I think I did that. Let me look here again. Yeah, there we go. So there's the S&P in the background, and you can clearly see when it has this big reversal candle right here, the S&P has hit a high and it rolls over, has a significant downtrend. That was in 2000. Same thing happened right here in 2007. And here's the S&P, significant downtrend in 2008. Now, you might say, well, why not point at this candle? Because that is a big white candle right there, but it's inside the rest of these. That's happened before, and it wasn't really the top. So in this case, this one up here was a significant reversal candle right there. And then the other one over here, this big, huge white candle right here, was in 2022, just before we had the 2022 cyclical bear market. So where are we right now? Well, there is no signs at this point of a significant reversal candle like we had in each of these three. Yes, the XLP relationship to the S&P is lower than it has ever been in history. That means the market is extremely bullish, but it's not reversing yet. But this is the kind of thing to watch. Now, these are monthly candles, so you don't get a complete candle until the end of the month, and we just began November. So who knows? Could by the end of November, this be a huge white candle? Sure, it could. And then if that happens, that's going to tell us that we are ready for a significant extended downtrend, not just a couple of days or a week. This 2022 was a full year, almost a year, January to October, for that cyclical bear market. And of course, 2000 and 2008 were right in the middle of secular bear markets. So they had extended downtrends, but that was pretty interesting, I think. So if you ever want to just take a look at that, especially at the end of the month, to see what that candle looks like, it's right here on the charts page on the middle column, XLP versus the S&P. All right, so let me take a look at a couple of stocks that people asked about, and then I want to look at the Magnificent Seven at the end. First is Robinhood, which I think just reported. Actually, no, they report tomorrow. So they will report tomorrow. They sold off with the market, hit right at the 21, and then it's starting to move higher right now. So that's positive. Everything else looks like it's starting to move up. So if they have good earnings, there's no reason to think that they shouldn't. Then this one, if the rest of the market recovers, of course, then this one should take off along with it. The other one was XOM, ExxonMobil, just moving sideways, not really doing too much. So you can see right here, just really a sideways movement right along with the price of oil, basically. Price of oil has actually started to move a little bit higher. On the market bias page, I have oil as one of these components right here. So you can see WTI crude is starting to come off the bottom. So it's starting to move higher. But in general, it's been in quite a long downtrend. So just like ExxonMobil is just going sideways, but oil is going down. So until oil recovers, ExxonMobil probably is not going to do too much either. All right, that's the ones that folks have asked me about. I want to show you the Magnificent Seven. And before I do that, let me just look at Palantir, because they reported last night. Palantir had a great report, sold off, hit the 21. Now it has a spinning top candle, which is indecision. This is going to depend a lot on what the rest of the market does. The ADX red line is getting ready to cross above the green, which means bears will be in control. And momentum, you can see, is a negative divergence. So momentum is starting to head lower, even as the price has gone higher. And we can look at the same thing on the RSI. By the way, tonight I'm going to do a Technical Tuesday on RSI and money flow, and I'm going to actually show you how to create a search or a scan in stock charts to identify when the RSI is very oversold. So I'll actually build that scan and show you that tonight on Technical Tuesday. So again, you can see that as Palantir has gone higher, the relative strength has gone lower. So that is a negative divergence. So this, I think, is going to move along with the rest of the market. But let's take a look at the Magnificent Seven. And I'll show you a few ways to look at these. These are the ones that I have on the website on this trend model, Magnificent Seven. You can see right here, short-term, medium-term, and long-term trends. You'll see exactly when these have changed. There's a spelling error that I need to fix right there. But Amazon, you can see, just got a medium-term up signal yesterday, November 3rd. November 3rd. But these are the ones that I'm tracking, and the top ones up here are basically, if you want to see the market cap of each of the triple Qs, this link right here will actually show you. This is the QQQ, shows you the market cap. They're listed in the same order that you see them here. Micron is, Cisco is in there. I just went down to number 12. Google is in here twice, so I only count that once. But I went down to Costco right here. I could actually expand it and do Cisco and Micron. It might be interesting. And then there's a couple of other ones that are important ones as well. But that's where the information comes from, and they're listed right here. You can see when they change, and that's exactly what I have on this chart list right here. So for today, this is intraday 15-second updates. You can see that Eli Lilly is the best performer today, up 1.2%, followed by Apple and Costco. But they're the only three that are positive. And Palantir is at the very bottom, down 7% on the day. And all the rest of them are negative today as well. So there's a couple of ways we can look at this. We can look at this as what's called candle glance. That's where you see them all together, and they are sorted by relative strength descending. So the one with the highest relative strength is in the upper left, and the one with the weakest relative strength is in the lower right. So Meta is the weakest. Meta, Netflix, Costco, Oracle, Microsoft are the five weakest, and the strongest are Google, AMD, Apple, NVIDIA, Broadcom, and notice Palantir has now dropped down here. Palantir was actually number 2 yesterday. It has now dropped down here to the middle of the pack. AMD reports tonight, so we'll see what happens when they report. Another way to look at this is you can look at it as a performance view, and this shows you the performance on different time frames. So year to date, this is sorted by year to date performance. Palantir is clearly the winner, 150% year to date, and AMD is number 2. We can just go down the list. Eli Lilly is 18% for the year. The worst performer is Costco and Meta and Apple at the bottom, and Tesla. But if we look at this on a just for today, again, this is what I just showed before. We can look at it on a 5-day view. Eli Lilly is the best performer on 5 days, followed by Amazon and Google. 1 month performance, AMD, the best performer. 3-month performance, we got Tesla and AMD number 2. And 6 months, AMD. So AMD is consistently in those top performers. And going back all the way 1 year, Palantir is the best performer over a year, 364% back for 1 year. So that's another way that you can look at these using stock charts. Lots of different ways to do it. You can do a gallery view, so we can look at each of these one at a time, which is the last thing I'll do before I leave you. These are just in alphabetical order, I believe. So here's Google. There's the rollover, just like I showed you with the rest of the market. So it's starting to move lower. Here is Google on a daily chart. By the way, the other thing to notice on this daily chart is whether it is getting back to new highs. So here's Google. Oh, that's the intraday, daily, and weekly. That's not what I wanted to show. Not the gallery view, but the chart list view. That's what I want. Here's Google. So things to look at is it making a new high? And this one did. Google did pull back, so it needs to go back up and make another new high. And then also look at the RSI. Is the RSI moving higher or lower as the price moves higher? In this case, it's a negative divergence. All right, so we'll look at each of these this way. Here's Amazon. Definitely Amazon is breaking out and relative strength looks great. Here's Apple making new highs, relative strength moving lower. Here is Meta, definitely negative. It's below all of its moving averages, including the 200. You can see as it made new highs back here, it was making lower relative strength, and that just continued to go lower. Here's Microsoft. Microsoft did go up and tried to make another high, created a double top, and now it is moving lower, and it's below the 50-day moving average right now. NVIDIA made a new high back here, and now it's pulling back, but we'll see if that continues. NVIDIA, of course, reports on the 19th and usually runs higher. So this will depend a lot on what the rest of the market does. But it's still very, very positive, very bullish. Tesla just consolidating sideways right now. Tesla, as it consolidates sideways, the relative strength goes sideways as well, which is what you would expect. Netflix, one of the losers. You can see Netflix relative strength definitely moving lower right now. Here's Costco. Costco has been in a downtrend for quite a while. Palantir just reported, hit a new high, and then pull back, but right to the 21. So Palantir might actually start to move higher off of this if the rest of the market cooperates. And I believe that we may have a pullback. We probably will have buy the dip coming in. So Arista Networks, it's a red bar, but it's sitting right on the 21. So that is the buy the dip point. But notice as the price goes higher, RSI went lower, negative divergence. Broadcom hit a new high right here. RSI went lower, negative divergence. Oracle hit a new high back here and has just been selling off ever since then. And it's very weak today as well, with relative strength definitely moving lower. So Oracle is not looking that great. AMD reports tonight. It's going to be really important how they report. As it's moved higher right here, the relative strength has gone down. So it could be running out of steam right through here, but it's going to really depend on tonight's earnings report. Notice the money flow too. Even as the stock has gone higher, money flow has been negative through that whole period, and the advanced decline line is actually lower even as the stock has gone higher. So that's concerning. Eli Lilly just had blowout earnings, continuing to go higher today. The RSI is actually equal to, or actually might be even a little bit higher than the previous one. So Eli Lilly looks very strong. Money flow is coming in. Accumulation distribution is looking great. So that one actually looks pretty good. So that's all of them together. It's going to be really important how the market ends the day today. If we go back, let me see if I still have it here. So I'll go back here and look before I leave. I just want to see what the market's doing. It's 11:50 a.m. on the East Coast right now. And we'll look again at the S&P, see what it's doing. So just basically hanging in there. Had a nice big gap down, tried to recover first hour of the day, and then it's moving lower. So big traders might be selling right now. So it's going to be important to see how this ends the day. Technology is continuing to move down. So the jury is still out of whether this downtrend will continue, but I think we'll know within the next hour or two. For those that are subscribers, you can always come and look at these charts. You can see Russell 2000 has a red bar right now, so it looks like it's continuing the downtrend. So it may be continuing to go down. All right, that's it for today. Thanks for watching. Thanks for all the comments yesterday. I appreciate that. I will continue to do this as long as folks are learning from it and interested in watching. And I will talk to you tomorrow or later tonight, actually, with Technical Tuesday. Will probably drop at 7 p.m. tonight. I'm going to talk about RSI, money flow, and I will show you how to create a scan in stock charts. Thanks, everyone. Talk to you later.